All right, so markets are closed today. I mean, we've got the bond market open, we've got, I think, currencies open, but otherwise everything else is closed. I think even commodities are closed, so markets are closed today. But we do have the data release, NFP, which just came out. Bit of an anticlimax, not the biggest mover, but it was better than expected in terms of jobs created. So therefore, we've got rates going up, dollar going up, but not too much. The rates are going up, maybe more, relatively speaking. The dollar's actually given back a lot already. So, well, we'll take a look at the charts. Now, S&P is closed, so we're looking at Thursday's close here. They close decently, right? Near high of day. Looks kind of bullish. Maybe a retest of this, although now that we know what the NFP results are, Monday, I reckon markets should retrace a bit, because if you remember the old pattern, it was rates up, markets down, and this time rates are up. And it's not because bonds are being sold that rates are going up. It's more because the chance of a rate hike, So yeah, if the old pattern resumes just for Monday, I reckon the markets should actually retrace. So despite this nice close on a Thursday, we should have maybe a bit of a drop, but a lot of things can happen between now and Monday, even pre-market. So Nasdaq very similar to the S&P. So let's just look at it technically. If the S&P does go back up, then first resistance will be the prior high. Okay, very simply here. If we go higher, which I don't think we'll do, it'll be this one, this high here, and then so we've got 3 levels of resistance on the way up. On the way down, actually now I would consider this support. So that's all I need to look at for now for the S&P, Nasdaq. So I would now say this is support and resistance is already determined, so nothing to change there. Again, I reckon markets should actually retrace a bit following the NFP results today. Dow Jones. Okay, resistance stays where it is. That's correct. Support. Maybe around here, let's say. But Dow Jones, if it gives back quite a bit and closes below 33,250, let's say, then we could maybe go back down, visit this area here, let's say. That's what I'm thinking for now. Russell 2000, weak as always, nowhere near as strong as the other 3 that we've known for several weeks. It's more following the weak bank stocks. So this actually, I think, will drop. Support is a lot more obvious, and I know that this support will not hold once we test it. In fact, Monday, we could even open at that level pre-market, maybe even below. So, but I'll just leave it because it's quite obvious for now. So I reckon the Russell will just go down and go low. And this trend line, I'm going to delete. I just don't see it as relevant anymore, because you see, here it was relevant, but as soon as we made a new low with 2 candles, it's sort of negated. So that's what I will keep on the way down in terms of support. Resistance, yeah, I mean, I would just say it's sort of this area as a small average between the 3 candles, this one here, and this one here, just sort of roughly there. 180 actually is also quite a nice psychological number. So, but whatever, we're not even going to touch that for sure. I mean, during the huge market rally, we never even got there, so we're not going to do it now when I think the market's going to go down. So Russell, that's what I'm looking at. Again, I think all 4 will see a red day on Monday. But what I'm really looking forward to is the Russell closing, 172 or lower, which means we'll then test the 167 low, and then we flush the absolute all-time bear market low, and then we go low from there. Looking at the bank stocks, very similar to the Russell. I like to follow the bank stocks from right after the Russell for that reason. Obviously, the senior, the XLF, the KBE, maybe less, but the XLF is a lot stronger. But still, compare that to the Nasdaq, to the Dow, to the S&P, nowhere near as strong. On the way down, yeah, I suppose there's quite a few smaller support zones. You could say the gap fill here, maybe, so between there and there. Is this a level? Yes, it is. This is really detailed, zooming in, sort of, these will come and go intraday, these trend lines, I reckon, but let's just leave that. And then obviously the absolute low. I don't think I'm overdoing it here. I just think this is very detailed. Again, this would count more intraday rather than daily, weekly trend lines. So what I think is going to happen, we're going to open lower. Do we open below here? Maybe not, but we'll venture below it. You know, maybe we go down here on Monday, but I expect a red day for the XLF. The KBE, look how much weaker that is. So we had a little bounce basically because the KRE had a bounce from its lows. So that explains why we bounced in the middle of nowhere, because I don't see any obvious trend line here. In fact, there is none. So we bounce, we retest prior support, we close at or just below it. Kind of makes sense. Now what happens? Well, we're going to open lower, and really there's only one extra trend line. It's the low from the last dip, which is here. You know, do we bounce from there? Do we close below it? Let's see. I mean, it's still a bit of a ask to have the KBE close 2.5%, 3% lower, but it's possible. I think we'll go back down again. You know, maybe just be trading around these two areas, these two trend lines, and then maybe the next day close below it, the next day test the absolute lows. The KRE, however, this bounce from the all-time lows, didn't even get to test prior support, and I think we're just going to have a red candle testing the lows. And I think the KRE, it's always the same story for me. The KRE is weak, is going to lead everything lower, and once the KRE starts to crack and again close below 41 especially, I mean, you're going to see the KBE follow, you're going to see the XLF follow, and of course, you're going to see the Russell follow, and then all these three bigger boys are going to have to basically follow the rest. So KRE, Russell, and everything else. That's to keep it simple. Those are the banking stocks. Let's look at rates. Now we do have an extra candle for the rates we have today, Friday. Rates are up because the market data is pretty decent, put it that way. NFP was quite well. So now it's, you know, if the economy is good, then you can hike rates again. So the odds of a rate hike have increased, and therefore that's been translated here with rates going up. However, what we've seen is with when rates go up as they're doing today, we've seen the market go up because it means, oh, they're selling bonds when they're not as scared anymore, you know. So because people were buying bonds and gold and the markets were going down. I'm not sure in which order, it doesn't really matter. The point is, when bonds and gold were bid, markets were down because the banking crisis is taking effect. You know, it's but now we've got rates going up, but not because the markets are fine, people are selling bonds, but because the chances of the Fed raising rates has increased. So I don't know if this means the market will go up. I actually think the market will go down despite rates going up. I think it's for the very reason the data looks good, therefore the markets can take another rate hike. So the markets should go lower because of that. So that would be the opposite of what's happened the last couple of weeks. But I think that's what will happen. I think, well, the rates have gone up. We see that now. But I think markets will actually go lower on Monday. And gold maybe sideways, you know, be torn between both realities. The rate hikes going up, but bonds not exactly going down because there's a lack of fear. So, well, we'll get to gold later, but I don't think it'll necessarily go. I don't think the precious metals will go down just because rates are going up. So anyway, on the upside, we see where I have identified resistance. This line becomes irrelevant. We've seen, I mean, before it was relevant maybe, but you've seen how we've just gone through it constantly with no problem, so it's irrelevant. I'll just leave it like that. Huge channel. You know, maybe you can add a little ascending in there. Maybe do we have that? Could argue that we do. But it looks like we finally have a bit of a pattern. So the 1 year up strong. Let's see on Monday, maybe we test the 4.8-ish zone. The 2 year, I think support is relatively well defined there. Bit of an average trend line. You can see it's not the absolute low, but it's because we've touched this area several times. So I'll leave that there. on the way up. Resistance, it's not that credible. I don't want to overdraw lines hoping that they work out. I still don't see anything incredibly obvious, you could say. This trend line here, no, I'll leave it. But I think we'll go and test the upper range on Monday, so between here and here, and support will be between here and here, but we're not going to go there for several days. The 5-year, you will notice that they go lower as we go further out into the yield curve. So we bounce from the low. I think this support is pretty well defined. Where do I expect resistance? Well, around here, the last high. The 10-year just made a bounce when it had to. It really had to do it there. Resistance should be around here. And then finally we have the 30-year. Again, had to do a bounce there on the ascending. Resistance, I don't know, something like here. But I think still rates, I don't know. Let's see what happens. That's what I see with rates. Let's look at the dollar, which went up initially following this data, but look at the resistance. Every time we have a little pump, we get a lot of resistance. So this candle here was a pretty decent pump, but look at the next one here on Thursday, gave back quite a lot. I thought we'd go lower, but of course it depends on the data. We have this NFP out, but look at that. You can tell the descending is acting as resistance, so that's great to see the trend line working as it should. But you'd expect the dollar to close a little higher than where it is. And if honestly, if it was to close around where it is, up basically unchanged, that would be bearish, because if after NFP data, which is positive for the dollar, you close the day unchanged, I mean, what doesn't go up must come down. So for me, this is actually quite bearish. So we would just sort of go lower and ultimately flush to the 101 or the 100.8 level on the DXY. Something like this, end up here. So who knows, anything can happen, but that's what I'm thinking. I think the dollar still needs to go lower, because if you don't force a breakout of this descending on a day like today, okay, volume is weak, but yeah, I just think chart pattern wise, it's just still looking weak. So it needs another leg lower until it can prove itself. So that's what I think about the dollar. Let's look at commodities, which are not trading today, correct? So copper, yeah, well, obviously it can either go up or down. Copper, I do expect to go higher. I expect it to go back up, test this range sideways like it did here, but eventually break out. So let me get rid of this other scenario, which obviously is possible, but yeah, I expect this. Go up, test the descending, go sideways down, and then at some point break out and close above it, and then consolidate and go back up to the 4.3 zone. So decent day though on Thursday. Natural gas. This is what I drew. Yeah, I was saying how it was spending too long down here, and this is actually quite bearish, that it had to make a move now, or it's probably going to go lower. And as always, I draw something which kind of plays out. It just plays out a lot quicker, but I know that it's just that my drawing is a bit clear. And I don't want to say it's done it now, but that's a pretty damn bearish engulfing candle. It just needs, and you can see we made a low there that was lower than any price action down here. So we did venture in some uncharted territory. All we need to do now is close below 2 point, let's say 5. Why not? But ultimately a close below 2 would really do it. But it's almost, it's 85% of the case is done, whereby we're going to go lower in natural gas. We ventured back down to the double bottom. We didn't bounce that much, and it took a while, and therefore now the bears are feeling more emboldened, and you can see what happened on Thursday. So let's see, maybe we need to go lower, which would be great. I would lose a bit of money, but not much, and I would be able to buy even sweeter prices until I can just go all in, basically the maximum allocated amount that I would be willing to do. So right now I've got 2 buys in, and I'm willing to do up to 4 or 5. So I would say I've got about 40% of my position in here. So yeah, don't mind a move lower. Definitely saw the potential there. Russell oil, WTI. Yes, I expect to go higher. Obviously we had this massive pump, so technically it did very well. It bounced from a long-term ascending. That was nice. And then I thought, oh, maybe we're going to retrace a bit, but look at this beautiful buying here on this hammer. This kind of gave it away. Look what happens next on no particular news, I believe. I thought, right, we can go to the mid 70s. Then we had this reversal candle, which took me out, of my paper trade. Up we go. And I think this is just insiders buying, knowing that they're going to cut production, because on this huge candle day, we have the cut in production. And what do I think is going to happen now? Honestly, not to chase something at the top, but I think we're just going to go higher, because this obviously proved itself before the news, and then on the news we have a strong move, and we're just holding, flagging, bullish. I think what it really needs to do is close above 83, and then it's just very strong going to the low 90s. But I did say, if it does retrace, consolidate here, expect any decent dips to be bought, because we just went up very, very strong on very, very significant news. Geopolitical, supply, demand news, OPEC, cutting production across, and also non-OPEC countries. So yeah, I expect it to go higher actually. And if it consolidates lower, I think then it'll go higher. So oil still bullish. I'm looking for the 83 close. Uranium, okay, it's basically starting to do what it did down here, which is where it has several candles trying to, well, it succeeded here, forming a nice base of support, and then it propelled higher. Now here it bounced twice, went higher, but this retracement is a bit too much too fast, which to me indicates it's not that strong. Uranium is not that strong. It should have really just gone higher, maybe tested this horizontal, or maybe this eventually, this descending zone didn't do it, just came right back down too quickly. I think it's really make or break time, right? It has to prove itself. It needs to rally back up to the most recent high. Let's call it here. It needs to go back up here pretty fast. Otherwise, imagine what it would look like. Imagine and you know what? I'm going to be honest. This doesn't count anymore. I think it was a false signal. If we rally back up, then that's good. Obviously, sometimes I get this right. It just happens a lot quicker. But anyway, we rally, and then we'll go higher, and then we test sort of this zone, probably break through, and then test the descending, and then whatever. We'll see what happens. But if it does not get to rally back to the old highs, then I'm afraid, or I'm happy, and I would welcome this, that it would need to go lower again. And honestly, if it does this, that's going to be very weak, and I would expect it to go lower. And if the markets go lower, I reckon uranium will follow the markets lower. Generally speaking, that's the way I see uranium correlating to the markets. It's not like gold, which sometimes correlates to the market, sometimes completely disassociates itself. In fact, even correlates inversely to the markets, as it's doing now the last couple of weeks. Uranium, however, doesn't have that sort of trend. So I reckon, yeah, I think we'll bounce a tiny bit, and then it'll depend on those candles, that price action. But I think it's definitely possible to go back down again. And if we do, that we actually flush this ascending for once. So uranium, watch out. I would love it to happen, because I missed the uranium boat, and it looks like it will come back to the dock. Okay, gold and silver. Yeah, so, we closed the week above 2000. So, and if gold was open today, it probably would have ventured below 2000 actually, because the reaction to the NFP was dollar up. So it would have, I reckon, meant gold down, plus you had rates up, which recently would mean gold down. But anyway, that doesn't matter. That's not going to take place. Monday we open. What's going to happen? Well, the market's going to go down, I reckon. Gold sideways again. But the longer it stays above 2000, it's a bit like natural gas. The longer it stays down there without going up, it'll go down. Gold, the longer it holds above 2000 without going down, well, we form a base to propel higher. And already we're starting to spend several days above 2000. So gold's looking good. Just needs to hold this level. Levels on the way down. Hard to say. I would say this candle low at least 1980. I'm not sure if this particular candle, let me see. You know, if I was to extend this, would that count if we go lower? Would it then correlate with this lower here? I just feel like 1980 would be a good zone to bounce from. But I don't want to overdo it with the trend lines. Let's just see. You know, on the upside, we definitely know there's only one resistance. It's the all-time high. Silver, stronger than gold, right? I mean, look, gold was sort of flat, even reddish, you could say, and silver was green. And look at this candle. I mean, this is a really good candle. We tested the lows and then we closed near the highs. It closed just like all the others, just as good as the others. And if there's any continuation, which it looks like there will be, then we go higher. And actually, silver has a lot of catching up to do, so it makes sense. So I'm a lot more bullish on silver than gold, I have to admit. I almost feel like if gold goes down, you could still have silver hold or even go up. That's how strong it's looking. Next resistance, I think it's all completely correct. About 4% away. That might take 1 or 2 good days. But we could, you know, we could just sort of venture and close around, you know, 25.3, and then we just go another day, and then we've completed our 4% move in 2 days. So let's see. Resistance is pretty clear. Support is pretty clear. Support lower than that, not as clear. I don't want to draw it. I just want to see how it reacts. Maybe the descending line, just like gold, could also test the descending. Otherwise, it's 1980. Silver, not as obvious for me. You know, if we start to break the descending, I don't know, 23.5, you could say that actually, couldn't you? Because that was a high there. Touched it, and yeah, actually, you know what? I'm going to draw this one in because this looks like a bit of a trend line in case we break it. Yeah, so let's see what happens. Bitcoin finally, you know, I expected a bit of a move today from the NFP, but volume's got to be light, so we can let it off. It's hard to say, you know, it's a bit like gold. It's holding, okay, it's held this area longer than gold has held 2000, but you could say if it fails, it's going to flush, obviously. And to me, a failure would be marked by a close below 26,500. Then it will flush and, you know, we'll go there, then there, let's see. But there's definitely the potential, if we have all of a sudden one of those strong candles, a close above 29,000, definitely 29,250. Yeah, then you're going to go and test definitely, you know, 32,500, and then we'll see. And then it looks like the bottom is in for sure. But, you know, let's just wait until it happens. I don't want to start guessing in the middle of a trading range. I'll just leave this resistance here to be sure that we really break it or don't. That's it. The miners, didn't cover the miners, did I? The miners, bit like silver, I would say, more than gold. Very strong still, despite the huge move. Here we have the resistance on the way up. I don't think I need to change that at all. GDX, I really think that we should be testing a little higher though, just to match gold's move a bit more at least, and even silver. So, I mean, look, I've trimmed my positions, so I'm happy whatever happens. But I have to admit now that I'm watching this, I wouldn't mind another move higher. So I just want to get a bit more, trim a bit more, and then really just be on the sidelines for like the inevitable drop. But I'm seeing a lot more posts all over the place and charts, you know, when you compare GDX, for example, I can do it now, GDX to GLD, for example. You know, look how low we are. Let's just go on a weekly chart, you know, and here I am trying to time my third sell, and you're just thinking, really, why don't you just do nothing and let it really start? Because as soon as gold starts to close, which it has done, you know, on a like monthly, quarterly basis and all that, once you have gold closing above 2000, on several consecutive days, you could have a base for a new all-time high. And what if, I mean, I reckon if gold starts to make a new all-time high, then, you know, the seniors and the juniors have a lot of catching up to do. That's when they'll really have a run. You know, people will rush into those institutional investors, and it's such a small market that just even the smallest of positions taken by some big institutions will just move this just colossal amount. So maybe I should relax on my selling. So that's why I'm watching gold very closely. You know, what if gold starts to run and test its 20,000, sorry, 2080 range, you know, the all-time high. So watch out. Maybe silver will drag gold up. Silver looking strong. So if silver starts to make a move, it'll just drag gold and say, we're going up. And it won't take much for gold to find itself above $2,080. Okay, that's my take. Hope it was useful. Otherwise, see you Monday. There is trading on Monday.